Hi, good afternoon, everyone. Welcome to the EPSI quarterly report first webinar. I want to wait a couple of minutes just to give everyone a chance to join, so please be with us. 2 or 3 minutes time we'll start the session. Okay, good afternoon everyone again. I think we'll kick off with the webinar. We're seeing just 1 or 2 people joining, so hopefully everybody's managed to register and log in. Welcome to the webinar on the EPSI quarterly report. This is the first webinar we're running in association with the report. In fact, the report has been running now for quite a number of quarters. And we're very pleased to be doing a webinar in order to explain some of our thoughts and to help understand the process behind the scenario development and the thinking that we're doing in that report. First of all, just want to introduce the EPSI team that's on the call today, who you will be hearing from. That's myself, Twan Vollebrecht, as well as Pierre Buisson and Chris Penton. Will all be audible today and taking a part in helping understand a little bit what's happening in the European power markets, particularly focusing on the Northwest European region. Just before we start, a couple of points. The slides, as well as a recording of this webinar, will be sent out afterwards. So you'll be able to either look at this afterwards or pass it through to your colleagues. And second of all, if you have any questions, you should find on the interface that you logged into an ability to enter your questions there. Please type them in and let us know if you've got any questions. We'll aim to answer them fairly quickly after they've been posed as we go through the webinar. The webinar today, I'm guessing, is going to take around half an hour or so. It's the first one that we're running, so we'll see how much material we'll cover. But about 17 slides that we've got in total. Let me have a look first at the agenda for today's session. First of all, just a brief introduction and background to the EPSI quarterly report that we do every 3 months, and in fact this is now the 7th issue that we've issued. Then we'll review the power market developments for those key Central Western European markets, Germany, France and the Netherlands, to see the market development over the last 3 months, but also over the last couple of years, and to see where the forward curves are going. And then move on to what we call a relatively standard EPSI scenario for those markets, to see what the fundamentals are telling us and how that may or may not differ from some of the market forwards particularly. Moving then into a comparison of those markets, and then finally a focus on Italy. Every quarterly report we pick one country which we add into the German, French and Dutch markets that we always cover in every issue. We've covered a number of different countries ranging from Hungary to Great Britain markets. This time we've chosen to focus on Italy, and we'd like to cover a few points on that market in the session as well. So starting first of all with a brief introduction on the quarterly report, particularly for those who may not have seen the quarterly report quite so frequently yet. This is really an opportunity for the EPSI team to review the markets and explore them. A great opportunity for us to effectively get our fingers dirty in making a forecast, albeit it is a projection that we are making using relatively standard assumptions. So we're not trying to specifically lay down an EPSI or a Genscape view in that projection, but we're trying to understand what do the fundamentals tell us, how the market's behaving, where have they been going recently, how does that differ compared to the quarterly report 3 months ago, where we made some projections as well, and to provide some commentary on that to our clients and interested parties in the marketplace. We're leveraging the EPSI platform, of course. A lot of the data that we're doing in the data research team, keeping up to date, the commissionings, the closures, what's happening with the forward curves, the wind and solar production levels, etc. And the market data store there is helping us a great deal to assemble this scenario very quickly and to be able to focus very much on the market insights and commentary. As I said, we study 3 key countries, Germany, France and the Netherlands, and in this particular issue we're adding a focus in for Italy as well in order to cover that. So moving first of all into commodity prices, I'll hand over to Chris Penton, who will review the commodity prices before we move into the power market developments.
Okay, good afternoon. I'd like to give you a quick overview of the commodity prices we're using and their impact on the scenarios. If we look at oil to start with, we can see that whereas the spot is moving slightly higher, which is largely due to a weak USD, US drilling down and Middle East concerns. However, the forward curve compared to the forward curve we used last quarter is largely unchanged. Going down to nat gas, we can see we're using TTF here. Again, the forward curve is very similar to the forward curve we used last quarter. There's not been too much change in the last 3 months. However, year on year, overall we are lower than we were this time last year, and that's largely due to lower oil, milder weather and higher storage levels. Coal, we can see, whereas at the end of a quite long bearish trend, the spot prices are largely moving sideways. Over the last 3 months, we still have a 2 USD drop in the forward curve. And then finally, on the emissions in the bottom right corner, we're seeing again a long bullish trend in this case. However, the 40-cent rise in the forward curve over the last 3 months probably is going to have a minimal impact on the scenarios we're going to be looking at today.
Okay, so moving on from the commodity prices, which are setting the scene really for market development, in a macro level sense. Moving forward into the individual countries, we would just want to review Germany, France, and the Netherlands. Starting with Germany, I think the curves going forward have not changed a huge amount. You can see there the dotted lines, the blue dotted lines on the chart are showing the forward curve as of February. The solid blue line there is showing the forward curve as of May. So there's not been a huge amount of change, but if we review the last quarter, we have seen some somewhat unusual developments in that particularly the fuel prices were quite low over the last quarter. We've had a lot of wind come through since Christmas, and as a result, monthly prices have been relatively low compared to other years, other recent years, down to around 30 euros per megawatt hour. I think the exception there, as you can see probably on the chart, there's a little spike there for the month of February, when in fact prices did jump up to levels that you would expect a little bit more for the winter. That was primarily due to the fact that the wind was running at nearly around 60% of the January levels, for example. So there's significantly less wind in that month, causing prices to be somewhat more elevated. If we look through into the forward-looking picture there, you can see that with the coal prices forward curve having come down, you can see that also the power forward curve is moving slightly downwards, particularly so over the summer periods. You can see there period 2 and then period 3 there being marked on the chart. However, over the winter periods, it's been relatively stable and not a great deal of change. What is interesting is, of course, in the situation that Germany is facing with a relative strong level of capacity and a relatively weak level of demand, there is a lot of pressure for plant to close. There is currently around 8 gigawatts of applications filed with the Bundesnetzagentur, and it'll be interesting to see what the progress is with those applications, as well as the potential closures that follow that, in order to see what the impact on the forward curve may be going out towards the 2016-2017 period. Pierre, do you want to pick up on France?
Yes, thank you, Tuan. Good afternoon, everybody. For France, so what we have noticed over the last winter is that weather conditions were particularly mild, leading to a very moderate demand. So that's for period 1 on the chart. This was combined with very high water levels in the Alps and high wind outputs in Germany, as we have mentioned. And this led to modest spot prices last winter compared to the high levels reached in 2012 and 2013. There was an exception as for Germany in February 2015, because in addition to the low wind outputs in Germany, temperatures dropped, and there was a stop of the Tihange 3 nuclear reactor in Belgium, and this led to a jump in prices, with the monthly price reaching 50 euros per megawatt hours. Then if we move from March-April 2015, we can notice that monthly spot prices establish above the forward curve seen a quarter ago, so that's the dotted line. And this was due to an early start of the summer maintenances of the nuclear reactors in France, and also early April, some strikes leading to the stop of some nuclear reactors. And so the monthly spot prices establish about 3 euros above the forward curve seen a quarter ago. And if we start looking forward this summer, so that's for period 3, we can see that the latest forward curve dropped below 30 euros per megawatt, and this is directly a result of the low coal prices that we have seen 2 or 3 slides before, and also an expected improvement of the nuclear availability in Belgium compared to the situation a quarter ago. For the rest of the curve, so that's the point 4 and 5 on the chart, we can see that forwards remain very stable and very similar to what they have been a quarter ago, so no real changes I'm expecting on the long term.
Okay, so moving on to the Netherlands, I think it's not surprising the Netherlands tends to follow the movements in the German market quite strongly. Particularly, I think to start with, looking at the last 3 to 6 months, we've seen winter prices being very modest. If you compare the point mark there as number 1 compared to the winter prices that we saw in 2014, 2013, certainly a very significant drop on those prices. Just as we saw for Germany, February prices are significantly higher than January and March, April, again caused by the nuclear situation in Belgium, as well as, of course, the flow on of market price levels in Germany due to the wind situation. Now, looking forward across the curve, you do see that there is a downward shift in the forward curve compared to the situation 3 months ago. That actually seems to increase over time somewhat, so that in 2017 the gap is slightly bigger than in 2015. In general, we've had slightly earlier than expected start of new coal units. The Eemshaven Unit A has now started, and we're expecting the commissioning of Unit B in the coming weeks as well. So that, combined with the drop in the coal forward curve, is helping to add a bit of downward pressure into the Dutch horizon over the complete curve. And as a result, forward price is looking to drop ever closer towards the 30 euros over the summer and ever closer to the 40 euros over the winter period. Moving forward then to understanding where a fundamental based market scenario might go using the EPSI platform. I just want to provide a quick introduction to where that scenario actually comes from. What we do is, you can see there on the European map, the countries highlighted in red are the countries that are included in that scenario. It is in fact essentially the same scenario that we are running throughout the 7 different issues of the quarterly report so far. What changes, of course, quarter to quarter is that we use the latest updates of spot prices and forward curves on the commodities. We adjust the demand data as and when required. We have wind and solar data coming through. That tends to be, of course, because we don't have a long-term forecast, that's be a very tricky one to achieve. We use a standard seasonal as well as daily shape. So that's all data that is coming directly from the EPSI data store and is available to all clients. So that's a feature of the scenario. It is not using any specific data that isn't available to our clients as part of a standard EPSI access. Of course, hydro, CHP, interconnector capacity, all of that is being taken into account. I think the key thing for the scenario, as I've mentioned, first of all, we're trying to make it a relatively neutral scenario. We're trying not to take very specific assumptions on the market. So, for example, we will use market forwards for commodity prices rather than taking our own view on fuel prices. But equally, we try and keep things as simple as possible. Interconnectors, for example, we assume to be constant over time, although there is, of course, in a few years' time, some potential upgrades that are under construction at present time. I think we try and keep things as stable as possible so we can see the real impact of a scenario, rather than you having to deduce what specific assumptions we may have made that would have produced a particular result. So moving forward then into the scenario results, starting with Germany. This is now looking at essentially the same chart. However, we're now projecting the scenario results, which is shown there with a solid red line for the current May report, as well as the dotted line, the red dotted line for the February issue of the quarterly report. And then contrast that with the forward curve as it came out at the time of the report back in May in blue, and then going back in time showing again the same scenario result to make sure we have a good back test as, against the spot monthly averages to see where that has gone. So I think for the German market, it is showing that from quarter to quarter at the present time, things are not changing a great deal when it comes to doing a fundamental analysis. The power prices for summer periods have dropped somewhat. You can see particularly if you look at the second half of the point 1 there, the summer of 2016, you can see that there is a 1 to 2 euros drop in summer prices coming through in the new scenario. That is bound to be the consequence of a certain amount of coal forward curve drop. The winter months are showing less of a clear change. It's small changes here and there, but in general staying very similar. I think also what's very interesting is that correlates very closely with the forward curve. There is, if you want to put it that way, essentially no risk premium between the forward curve and the fundamental projections. I think that's really a sign of the German market very much under pressure, hitting levels that are really representing a bottom given current market conditions. And as such, that is a relatively stable situation at present. Maybe move forward to the French situation for Pierre's commentary. Oh, sorry, one more thing I wanted to mention. Let me just move that slide forward. Is the German power demand development here. Now, from the point of view of the scenario analysis, we're using, again, a very conservative power demand assumption. So this is assuming that power demand growth is essentially 0. We don't want to take a particular view on that without having real data to work with, actual data. But if you look at the situation from 2013 to 2014, the latest data on actual power demand is showing a 5% drop. And I would not be surprised if going to 2015 we were also somewhat on the negative side. But that is a very substantial drop, and of course combined with wind and solar generation levels, which are growing over time. You can see there in the chart the dotted lines are showing the net demand after wind and solar has been deducted off the demand levels. You can see that the system really is under pressure from the point of view of having relatively modest demand levels in the context of very strong supply levels still awaiting some closures in the coming years. Okay, Pierre, on France.
Yes, thank you. So the first important thing to notice in our scenario results for France is that our latest forecasts are notably different from our previous quarterly report. So our previous quarterly report results here is represented by the dotted line, whereas the solid line illustrates the latest quarterly report results. And there are two main underlying drivers for this difference. The first one is, as we have seen, commodity forward prices are lower in this today than 3 months ago. And the second thing is, as for Germany, the revised demand assumptions. So in our latest scenario, we have used the latest data produced by RTE for demand. So, and RTE has announced that demand dropped by 6% in France in 2014 compared to 2013. And the integration of this revised new demand data in our scenario led to a downward revision of our price projection, particularly for winter months. And you can see a quite big difference during like the periods 2, for example, in the charts between the dotted line and the solid line. And it's also because, as we all know, the French market is very sensitive to demand fluctuation during winter months. If we now compare with these scenario results with the forward prices, we can see that the forward curve is well above the scenario results, about 10 to 15 euros above it. And this indicates a very, very high risk premium on the French market. And we have investigated the reasons for this difference in the next slide. So this very high risk premium that we have seen reflects the possible tight situation, the tight supply context for France during next winters. And this is a very big source of concern for RTE. The entity is producing many reports about this. And indeed, the application of the Industrial Emission Directive, EID, may lead in France to the closure of important thermal units by the end of 2015. About 2 gigawatts of coal units could be closed, and about 8 gigawatts of oil-fire units could also be closed following this directive. In addition to this, we know that there are some discussions in France for the closure of the Fessenheim plant, which would lead to an additional decrease, an additional capacity reduction of 1.7 gigawatts, possibly in 2017. And we have combined this context of capacity reduction with a cold winter situation in a scenario. So that's the purple line you can see on the screen. And what we have noticed that indeed there is a tight supply in a situation in this context, and we can see that all projections is then very in line with forward prices. So it seems that indeed the forward curve for the moment is estimating that there is a big risk due to this, the application of this IAD directive plus the closure of some nuclear units in France, that in case of a cold winter, prices on the market may reach very high level, above 50 euro per megawatt hour.
Okay, moving on to the Dutch power market, we also see a significant gap between the forwards and the price projections coming from the fundamental analysis, but in a very different context. First of all, the Dutch power market has not seen the same level of power demand drop that the German and the French power markets saw. So there's a lot more stability in the total consumption levels in that market. However, given that there is the higher than expected nuclear availability in Belgium coming through, and at the same time the commissioning of the coal units being brought forward a little bit compared to what we had expected, you can certainly see, as marked by the number 1 there, that summer prices are somewhat lower in the latest scenario than they were 1 quarter ago in the dotted line scenario. Now, moving forward, there is a little bit of change there as well between the scenario from 3 months ago and the current scenario. Particularly, you can see there in the early winter months, so the autumn, early winter months, 2016. This is very much driven by the coal reduction, the coal forward curve reduction. However, in general, the pattern is very similar, and it's a relatively situation from a fundamentals perspective. What you do see is a continuing downtrend. If you look at the top of the curve there, the tops, the winter tops from 2013, 14, 15, 16, 17 through to 18, you can really see there is a downtrend, albeit it is bottoming out somewhat. At the same time, the summer curve is looking very, very similar and also producing that same sort of trend. Now, what is a little bit surprising to some extent if you look at this for the first time, but certainly not surprising to us having seen a similar picture over a number of quarters now, is the gap between the forward curve and the fundamentals projection, particularly over the summer period. Certainly over the winter period, there is a certain amount of agreement. We end up with prices around the 40 euros per megawatt hour level. But over the summer period, you can see the forward curve is coming up with around a 36, 37 average, whereas our scenario is coming up with something much closer to 30 euros per megawatt hour average. And to be totally honest, I think our view would be that over the summer, the forward curve is being wildly optimistic. Given the context of large coal plants being commissioned, in the context of coal forward curve falling, the wind generation still growing over time, flow-based market coupling, which is adding a little bit of downward pressure on the market as well. In total, we do continue to feel that fundamental scenario that we've developed here is a pretty realistic representation of where the fundamental situation is taking us. And indeed, having looked back across a number of quarterly reports, we can see that quite often the market was projecting forwards at levels which later on gradually adjusted themselves much closer to the forward projection that we're coming up with through our scenario. So I think that, again, we feel, as we have mentioned a number of times in the past, that at present that forward curve is representing a level over the summer period that we feel is likely not to be reached. moving forward, just to have a quick look at the situation where we compare and contrast the three markets together on one slide. I think the conclusions from that exercise are probably going to be fairly clear. There is a strong convergence between Germany, France and the Netherlands over the summer periods, and you can see that summer 2015 there is still a little gap there, particularly through with the Dutch market, but over summer 2016, summer 2017 you can see the convergence taking place more and more to be almost exactly identical prices over the full summer period. For the winter periods, there are still some differences. You can certainly see, as Pierre mentioned earlier, the winter prices for France tend to be somewhat more elevated also for the Netherlands in the near term. But again, as we move out towards 2017, you can see there is also some level of convergence gradually over time taking place. So I think that those curves really are projecting quite a clear story and providing a backdrop to the individual country discussions that we've provided earlier. Now, moving on to Italy, I'll pass over to Chris to provide some comments on the Italian situation.
Hello again. So Italy is our focus country this quarter. So if we begin with a brief overview of the characteristics of the Italian power market. So very important are the imports coming in from the north, from France and Switzerland, although this is less of an impact at weekends. Gas is a large slice of the installed capacity at 45%, and PSV gas is typically 1 to 3 euros higher than continental gas prices. So with no nuclear and only 9 gigawatts of coal installed capacity, it's a relatively expensive generation mix. Represents a impact of maybe 15 euros of prices above Northwest European power prices. So if we look at the scenario results in here, we can see in red. It's a very volatile spot we've seen over the previous winter, but the results are fairly satisfactory. If we look forward for the next coming months into Q3, Q4 and Q1, we can see that the market is trending slightly higher than the scenario results, but that represents a very realistic 2 euros of risk premium. Overall, with the curve, what we could observe as well is that the curve going forward from now onwards is relatively flatter curve than we've seen over the past few quarters. We think this is largely as an impact of the relatively lower gas prices in the forward market for the coming couple of years. We can see that if we compare the Q1 2016 to Q1 2017, there is more upside than there is downside in those power prices impact of the gas. If we also look at the Q1 16 and Q1 17, we can see a slight contango there, and we see that as the impact of the very high possibility of further closures in the installed capacity for coal in Italy. Typically, 1/3 of that installed capacity in Italy is made up of generation assets which are over 45 years old from the 1950s and 60s, and with that closure, we should see again slightly higher price forward curve. Now, if we move on to the next slide. One of the recent enhancements we've made to the EPSI platform is to split out Italy, or at least give the option to split out Italy into the 6 zonal areas that make up Italy. There's been a lot of work gone into the data associated with this, but we're fairly happy with the results that we can see here. Looking at the characteristics of these 6 zones, We can see that the mainland zones of Nord, C-Nord, C-Sud, and Sud are relatively correlated in the results we've seen in the last couple of quarters. But if we look at Sardinia in the bottom right, that is definitely trending slightly higher. This zone is characteristically connected by 1,000 megawatts of interconnected capacity, which is enough to keep it tied to the mainland, but trending slightly higher. However, if we look at the bottom centre, we can see that Sicily, which only has 250 megawatts of connection capacity, and typically in the summer months has very high demand from air conditioning, leading to very high, much more volatility and higher prices, typically up to 25 euros above the price we see in the continental zones. If we also compare the 6 zones for the forward curves going forward, for the STARO results going forward, we can start to see some of the characteristics of these zones here as well. Again, the top 3 northerly mainland zones are fairly well correlated with a decent mix of generation assets. But the bottom 3 zones, Sud, Sicily and Sardinia, typically have a lot more gas generation. So we can see the impact on Sud is that with the lower gas prices in the current forward curve, this is giving us a much flatter curve going forward. But the 2 island zones, again, are disconnected from the mainland trend, and we can see that actually for these 2 zones, we're observing a double peak effect of summer and winter, which corresponds to demand and the constraints on the interconnector. Going forward, we don't really see anything on the horizon which is going to lead us to expect any changes to the characteristics of Sicily unless there is a significant change in the investment in interconnection or new generation in this zone. I'll pass it back to Tuan on that point.
Sure. What I'm just thinking about, I have one final wrap-up slide, but I also noticed that there have been a number of questions asked, and apologies that working this new technology, we haven't managed to weave some of those questions into the individual slides. But I think I'd like to just run through a couple of those questions and see if we can point them back to the original points. So, Chris, I think you answered some of them specifically. We could
sure.
Let's have a look. The link between France and Spain, the latest information on that. I think, Pierre, something you want to say on that? I know that from a monitoring point of view here, I know that the Genscape team has started to see some initial bursts of power down that. So I believe that the commissioning process is in that grey zone where it's hard to tell whether it's going to come online fairly quickly or whether it's still going through the pains and trials of getting it up and running. I don't know if
yes,
guys
exactly.
want to make a quick comment on that.
No, exactly. It's currently in this, according to the latest information I have, it's currently in this grey zone. So there was an official inauguration end of February, and now there's some kind of the commissioning process is ongoing, so we should expect that certainly during summer or maybe in September the line will be fully effective and working at this maximum capacity.
Sure. Okay. And then turning to a question about the new Dutch coal plant, the Eemshaven B, I think that was what the question was in relation to. Yeah, do you want to cover that briefly?
Yes, so indeed the first unit, Unit A, was commissioned or commercial operation start early May, and regarding Unit B, we can expect commercial operations to start in July 2015. So that's the schedule for the moment, and it seems going in the right direction, so it should be respected.
Sure, okay. Just picking up on another question, which was asking whether we see demand picking up again when the economy grows in the future. or do we expect demand and economic growth to further decouple? Well, that is certainly one of those topics that, once you start going beyond the short-term trading horizon, certainly a very, very important question to try and answer. I think my view on that is that there seems to be, we certainly had a fair bit of decoupling over the extended financial crisis period, so the period 2008 through to 2013. Clearly there was a strong correlation in the sense that there was both economic growth collapse as well as a demand growth collapse in the initial phase, but then there was a significant breakdown in the normal correlations following that in terms of 2011, 12, 13, 14 onwards, when we would have expected the power demand growths to follow the economic growth a little bit more closely than it has done. There is a lot of energy efficiency measures, of course, which have impacted on the growth rates in a number of countries. I think certainly Germany is seeing the impact of that quite strongly. I think at this stage it's hard to say anything general about that. You really have to look at it on a country-by-country basis. For example, the fact that the Netherlands is not showing the same demand reductions over the last couple of years as you're seeing in France and Germany, for example. I think that's a strong indicator of the fact that there is a different relationship between economic growth and power demand growth for that country. Certainly, the level of energy efficiency measures there is not nearly as strongly impacting on that demand growth. So it's a difficult question to answer in its generality. I think what is true is that compared to maybe 8 or 10 years ago, it is no longer possible to make a blanket assumption that the two are closely related, and we simply have to determine whether it's 50% of the demand growth is coming out of economic growth, or whether it's 100% or a 200% relationship. I think it really has to be looked at on a country by country. Just looking at, let's have a look, a couple of other questions. I'm just trying to pick something up that I know the guys have also been answering some of these questions during the session directly to the people asking questions. So just picking up on a couple that will be generally useful to the overall conversation. I think there's a question here about the Italian coal plants that we're expecting to close. To be honest, I think that's something we'd have to probably come back to you. I think, Chris, we need to have a look at that and come back. So feel free to drop us an email into the Energy Fundamentals team after the call, and we'll be able to pick up on that specifically, unless, Chris, you've got any particular...
Oh, no, that sounds like the best approach, for sure. Yeah.
Sure.
I mean, okay. I don't think we're typically, I don't think we're identifying exactly which ones. It's more the overall trend.
Exactly, and I think it's more a matter of saying, well, this is something that is looming, and it's a matter of trying to understand, the probabilistic approach of whether that is likely or not. Certainly within the scenario horizons, there is a lot of uncertainty about that, but it's coming up in the next 5 to 8 years or so. So that is certainly on the cards. A question here, just very briefly, on the Eemshaven plant on the platform. I'd have to, again, unfortunately we don't have voice here, but I know there are some of the Genscape team here following from the real-time platform. I'm not 100% sure about the latest status on that. Pierre, do you have a status on the Eemshaven plant on the real-time platform? Do you know if that's being monitored and able to be...
Yes, I've just asked one of our team, and Eemshaven will be covered.
Okay, very good. So there's a good question. That's certainly an important one in the Netherlands. It's going to be a fairly large chunk of capacity that is coming through. There's a couple of questions that came through regarding, if you like, more modelling related questions. For example, there's a question here regarding the intraday ramping up and down of French nuclear in our scenario, and to what extent we capture that. I want to start by reiterating that what we try to do with our scenario in the quarterly report is to provide a relatively straightforward, easy to understand, specifically driven scenario. So we're not trying to spend an awful lot of time tuning these scenarios, because the idea is we want all of our clients to be able to reproduce that same situation very, very easily. And in fact, it should represent a relatively neutral view rather than a specific view coming from our team. So from that point of view, the ramping up and down of the French nuclear is a natural consequence of the fact that there is otherwise quite simply just going to be an overcapacity situation in some hours. Clearly, it's also related to the availability situation, but we do not specifically manage that ramping process in this scenario any more so than a default scenario would do so. I'm trying to think. I think that's most of the questions that we had that I can see us being able to give an answer to here quickly. Do feel free, if we've not answered that question that you've posed, to drop us a quick email afterwards. I think the easiest place to drop an email probably would be to info@energyfundamentals.com at this time, just because we are still running on the Energy Fundamentals domain with the platform, and we'll be able to get back to you with any of those questions that you have there. So moving back to just 1 second, let me see if I can move the page one forward. There's somebody else. I've lost the little window I need. There we go. All right. Very good. So just wrapping up, I think there are some fairly obvious comments as conclusions that we've made throughout the discussion. Demand is clearly a driver of what is happening in the market. It's been falling across Central Western Europe, albeit in the Netherlands, staying relatively stable. I think the key question is how well the generators in Germany will be able to continue to cope with that challenge, because on top of the demand reduction challenge, there is also the growing level of renewables, wind and solar. And as you can see in the scenario results, as well as the forward curve, the market really is under a lot of down pressure. It is essentially sitting somewhat at the bottom end of where it is able to sit, given current conditions. And the question is, when will there be some breathing room for that market to come up for air? And will that potentially be driven by some of the closures that people are trying to apply for at the present time with the Bundesnetzagentur? The question in France, of course, is all around why the fundamentals and the forward curve have such a large deviation between them, particularly over the winter months, and to what extent that is covered by the concern that some of the oil and coal-fired plants are going to be closed as part of the IED directive. That certainly would appear to be a strong explanatory factor, but it'll be interesting to see as we go towards the end of this year as to whether that actually takes place, or whether some form of derogation will be given, or some form of other approach will be used to try and avoid those closures, or whether the forward curve will adjust itself. In the Netherlands, the Eemshaven plant's been mentioned also in the questions a number of times. That is a fairly large chunk of capacity coming into the market, which is further exacerbating the oversupply situation. And the real question here is, to what extent will that downward pressure continue until we have convergence with Germany? I think that is almost a certainty that there will be continued downward pressure, but the question is that a matter of 1, 2, or 3 years before we see that near full convergence that we're certainly seeing in our scenario at present time, fairly quickly over the summers, and increasingly also over the winters. And then finally, for Italy, we've shown a few earlier results there, just to highlight the capability of the platform also to look at the zonal situation. Clearly, the building of new generation as well as interconnector capacity has the potential to reduce some of the interzonal bottlenecks that are currently driving some of those zonal price level differences. The key question is, to what extent will that continue, those price level differences, particularly with some of the islands being priced at very different levels, and how quickly will some of that capacity build out on either new plant or interconnection, how quickly will that lead to more of a unified Italian price? So At that note, I think I would like to wrap up the session. Thank you very much all for participating in this. We're very pleased to be running a quarterly seminar now to go along with the quarterly report. As I said at the beginning of the call, the slides and the recording will be sent out to all those who registered for this webinar, so you'll be able to review those afterwards, and we're more than happy to receive questions. We'll make sure also that you'll receive an email address for questions as part of that email going out with the slides and the recording. Thank you very much for joining us in this, and we look forward to further questions and comments and discussing, particularly also with our clients, the situation that we're finding the markets in over the coming quarter in order to see how that changes again for the next quarterly report. Thank you very much.